You're tuned into Agriculture Today, and we start our Friday show as we normally do with a grain market update. And as always, we're joined with K State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you. I appreciate it, Shelby.
So, starting off with kind of laying a foundation of the grain market, how we normally do, talking about futures.
As you look at where futures prices are, as you and I are talking about them today, they are up tangibly from where they were a week ago or even 2 weeks ago. And there are production concerns for the grains, for corn, soybeans for some degree. We have major issues happening over in the Black Sea region again, some actual physical destruction of grain facilities in Ukraine from aggressive actions on Russia's part. Prior to that, there was a bridge that was blown up heading into Crimea. So there's enough aggressive actions going around over there. But you have that affecting the grain deal that's occurring, and so and in most normal years, we'd be at this time in the calendar, Shelby, and if we weren't worried about crop size, we would have probably already started to decline off into harvest. In fact, that's kind of what was happening. But now we have weather concerns, for worrisome forecasts for corn and for soybeans that have come in, and the downtrend that we had seen, which had been pretty sharp, really for new crop bids has gone the other way. So when you ask me to comment on where the futures are at, man, they've changed. For corn, for instance, on yesterday's closes on the 20th, we had September at 537 and a quarter, D's at 546 and a quarter, and really we had gotten down to about 485 at the worst, 490, 495, not that long ago. So you've got about a 50 cent run up in corn futures on the two lead contracts. The once July went off the board a few days ago. The August contract for soybeans, 1495. November 1404. It wasn't that long ago where you and I were talking about numbers in 12 and 13. 12s and 13s for that November contract. So some of the same issues that we're worried about for corn yields are affecting our perception of where where production yields and production will go as we get off into in the soybeans. Again, July, we're right in the key reproductive phase for corn, coming into that in August, but the concerns about dry weather affecting both those crops. And for wheat, we've got the international things that are really affecting the market, and also just some good old-fashioned production supply demand issues in the U.S. Rains in Kansas for the wheat that is being cut in the West, delaying some harvest. That's an issue. Pardon me, I think a big issue to be thinking on that's continuing to develop is that the dry conditions up in Canada that are now, as we look at the drought monitor maps, now coming down into North Dakota, well, all along the U.S.-Canadian border, and you're coming into some awfully important hard red winter wheat, durum wheat, production areas right in there. And so you've got concerns, white wheat farther out to the west as you go into towards Washington and parts of Idaho. So anyway, we just don't have a docile, nice, well configured set of markets. Again, September hard red winter wheat, as you and I were talking about, 874 3/4 wasn't long ago. We were thinking, gosh, we were hoping we'd stay above 8, and now we're at 874. We saw one day this week where we jumped 35 to 40 cents in the wheat market, and that was tied in almost all on market panic. panics, but maybe not the right word, but great concern about that Russia-Ukraine grain deal going away, and then when rockets started to fly too, that really drove home that. And I think when you have a move like that in the market, and yeah, Chicago we moved even more, you had something happen that wasn't expected, and that surprised the market. It changed the game in a way, and we'll see where it all goes.
And what are we seeing then on cash and local basis?
Um, I think for corn prices, we've seen the future sort of lead the way. Basis levels really pretty good. We just stand back and look at corn spot basis, for the upfront cash bids, particularly in Western Kansas. We had much stronger basis last year. Over $1 in the Garden City area, 80, 90 cents a dollar elsewhere. We still have good cash prices, but the futures now are carrying more of the weight. We again 90 over in Garden City, 66 over in Colby, again Columbus representing Southeast Kansas, really anymore the second strongest market in the state. So bless their heart, 86 over for the top bid, for the highest bid in the region, and again that closely rivals what's happening in Garden City. Grain sorghum, if I can just mention it while we're here looking at the cash prices, we've had a real slug of grain sorghum forward purchases, and a week or two here, 1 week in particular, where we had really very strong grain sorghum physical movement, physical exports. So it's kind of a surprise here. We have about 5 weeks, about 5 to 7 weeks left, and about 7 weeks left, pardon me, in the marketing year until we get to till the end of August, and now suddenly we're jumping up. In fact, we're far enough into this marketing year now where we're starting to look and see if some of these pre-sales that we had for the major grains, are they rolling for corn, sorghum, and soybeans into the next marketing year starting September 1. All that said, just a positive move on the part of the grain sorghum market, and you got cash prices all with positive basis levels. Strongest bids, Topeka area 35 over, 34 over Columbus, 26 over in Salina, out to the west, and Hutchinson's about 10 over, and new crop bids. Really, you just kind of watch and see where the best bids are. And in the Hutchinson area, as a new crop bid, you have even money with the futures, and that's for grain sorghum, and that's 10 cents stronger than it is for corn. So something's going on in terms of those particular locations having really strong grain sorghum bids. They're probably export oriented elevators, terminals that are trying to attract and encourage sorghum to be brought into their facility so they can ship it when they get the opportunity.
And something then also that you specifically wanted to talk about today, Dan, was the likelihood of different outcomes for some of our major crops.
Yes. I kind of think that's our job. We're not into the daily rough and tumble of helping people hedge or do this, but I think the market wants us to have a unique perspective. For corn, the USDA's projection of 177.5 bushels per acre and 15.3 billion bushels of corn is, I'd say, about 20% likely of happening. And much more thinking that probably a 3 out of 5 chance of having yields instead of 177.5, given the problems we're seeing, about 2 bushels per acre lower, and you end up with about 15.15 billion bushel carryout, and ending stocks instead of 2.2, 2.3 billion, more like 2.1, and prices a little bit higher than what the USDA projected. They projected about 4.8 and 5.0. By the time we've wrestled with the numbers, I think what I'm seeing is that the big jump in corn acres is going to make it pretty hard for us, unless we have a corn yields 171, 173. It's going to be pretty hard for us to get below 2 billion bushels carry out. And that's a pretty important area. So if we're around 2 billion bushels, it's kind of it puts a lid on our prices. Now so when those acres shifted to corn, it really changed that game. Those acres went to corn out of soybeans. So soybeans is the other side of the story. We're tight enough on acres that now, as we've reduced them about, I think, 4 million acres lower for soybeans, that the USDA kept the same projection of 52 bushels an acre that they'd had, but dropped the acres and ended up with a ending stocks projection of about 300 million bushels, which is not much. When we really got tight in the past, it was around 100, 150. Well, if we now have just anything like a 50.5 bushels per acre, or more like 49 bushels per acre with problems in the central and eastern corn belt that we're fearing, then we're getting down to pretty close to 200 million carry out, which is pretty close. Stocks to use below 5%, prices moving pretty strongly. So as much as this acreage issue really affected corn and kind of puts a lid on just how high by itself it can get, it really opened the door for a lot of volatility on soybeans. Last thing I'd say on those crops is farmers in South America are watching all these prices, and they see these great soybean prices that we've got, and they're going to be planting their crops not too long, about September, October, November, December. And it's thought right now that as they see corn doing just so price wise, I mean, still very good, but so relative to soybeans, that will probably swing quite a few acres in South America over to soybeans. So for the American farmer, then his choice is, does he go right along with that flow, or does he say, hey, if South America is going to go great guns for beans next year, what do I do for soybeans and corn when I figure out my 2024 planting? So that's a big thing. I did also look at some numbers for wheat. I don't want to go too long here on that, but I guess the point on wheat is that I think the USDA has had a hard time projecting the right amount of U.S. wheat exports. So the numbers that they put out are like 725 million, and you look at our numbers now, we're not gonna hit the latest numbers. So I've taken basically the USDA's projections and been pretty conservative with what the exports are actually going to be, and with that, it puts more of a limiting, inhibiting figure on the price. It's a polite way of saying, yeah, it hurts our prices, that we don't have exports. So the big thing that we thought would happen about 2 years ago, and all this started to go on in the Black Sea area, is that, hey, they're short, Ukraine's going to be short, and it's that business will come to the U.S. Well, it never has yet. And maybe that's currencies, a whole bunch of other issues. So I think until we see the day, the week when the world says, hey, we don't have enough wheat over there to buy, and let's go start buying from the U.S., that's the day when we really start to see wheat prices take off all that much more. But that day hasn't come yet. And then the run up that we've seen is general market fear on Ukraine, Russia, and the actions of that war over there.
Dan, I appreciate you joining us once again, as always, and giving a grain market update for us.
Thank you very much, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now, but we'll be back with more ahead on Agriculture Today.